Tens of millions of American workers lost their jobs last year when the COVID pandemic struck. The federal government responded, extending and boosting unemployment payments for those affected. But now, that extraordinary support is being withdrawn. And at the same time, the national moratorium on evictions is expiring. The household budgets of a lot of people, millions, are going to be negatively impacted by this. What will the repercussions be? Welcome. I'm Adam Taggart, founder of Wealthion. We've heard loud and clear that you viewers are enjoying these short explainer videos on current developments in the news. So here's a fresh one on an important topic that, in my opinion, isn't getting talked about as much in the media as it deserves to. I'm sure you all remember the violent gut punch that the U.S. workforce took last March as the world shut down in response to the COVID-19 pandemic. Total employment in America dropped by over 20 million jobs in the span of just a few months. Tens of millions of households suddenly lost their income. That had never happened before in the history of our country. To avoid a Great Depression-style crisis, the federal government, to the tune of trillions in deficit spending, issued a series of programs to support the unemployed and to stimulate the economy. And it largely worked. Most affected Americans were able to keep a roof over their heads and food on the table. The economy returned to positive growth and the stock market zoomed to all-time highs. Now, there were real costs to this, not the least of which is the resultant decline in the purchasing power of the US dollar. And more voices are now asking, can we afford to keep this safety net in place? And a growing number of them are concluding that no, we can't. The current American Rescue Plan, which replaced last year's CARES Act, extended unemployment benefits for those out of work to September 6th of this year, Labor Day, and it added an additional $300 a week on top of the regular $400 a week that recipients receive. As of right now, while the numbers have come down over the past year, there are still 16 million Americans, that's the green line in the chart here, who remain on unemployment. That's still 8 times more compared to pre-pandemic levels. Now look at the blue line. Notice how that's the vast majority of payments folks are currently receiving. That represents the federal benefits that will expire on Labor Day. And given the growing political resistance on Capitol Hill, it's not looking like Congress will have the appetite to extend the program. But further, those federal benefits can be turned off sooner to the residents of any state should that state so choose. In fact, as of this filming, 24 states have declared they plan to end these benefits as soon as this month. Why end them sooner? Well, in addition to the general affordability concern, many states see the enhanced unemployment benefits as generous enough to deter people from seeking active employment. As many states open back up from lockdown restrictions, businesses are having a challenging time finding applicants for millions of open positions. And the U.S. Chamber of Commerce agrees with them and is asking that $300 a week bonus supplement be ended before the Labor Day deadline. And President Biden seems to be on board too. His recent comments on the topic include warnings that unemployment recipients are going to risk losing their benefits if they turn down the opportunity to work. Okay, so it seems that those extraordinary measures that were put in place to support out-of-work families are being wound down now that the economy has picked back up and COVID cases are coming down. But the timing is also coinciding with another big shoe to drop, the end of the moratorium on evictions, which was put in place last year. Again, in an attempt to protect households impacted by the pandemic, the federal government forbade landlords from evicting tenants for being unable to pay their rent due to lost income. That moratorium ends on June 30th. Now, currently, there are more than 11 million Americans who are behind on their rent. And estimates of how much back rent is owed go as high as $70 billion. Now, that's a massive burden that landlords across America have been shouldering. And many small mom and pop property owners are breaking under it. It's highly unlikely that this moratorium is going to be extended. So here's where we are. The vast majority of unemployment benefits for out-of-work Americans are set to expire on September 6th and likely won't be extended. A growing list of U.S. states, nearly half of them so far, plan to end those benefits even sooner, several starting as soon as this month. At the same time, the moratorium on evictions is ending on June 30th. The other day I posted this tweet. This and the end of eviction moratoriums may be the most important developments of 2021. How will the millions now dependent on extraordinary support from the government fare without it? Look, whether you're in favor or not of these programs expiring isn't the point of this video. I'll leave those to the policy experts to debate. But it seems highly probable at this point that millions of American households, a disproportionate amount of them older, poor, and of color, are going to be a lot more squeezed financially very soon. Yes, hopefully a material number of them will find gainful work in the recovering economy, but an awful lot of them likely won't, or won't be able to do so quickly, especially if having to deal with losing their housing, as it seems a pretty easy bet that a tidal wave of evictions will follow the June 30th deadline. As a reminder, nearly 1 in 10 American workers is currently on unemployment, and 11 million are behind on their rent. The stimulus checks and unemployment assistance they've been receiving have flowed into the economy as they've bought goods, services, and yes, even stocks. With so much of that support ending swiftly over the next few months, it's difficult to see that not having a dampening effect at the margin for the economy and the financial markets. How big an effect will that be? That's unknown at this point. But the financial downshift for these millions of households will definitely create social shockwaves. And it may, just may, be a potential pin capable of puncturing the market's seemingly impenetrable euphoria. We hope you've enjoyed this latest episode in our new series of explainer videos on key topics in the news. If you'd like to see more like it, please, if you haven't yet, just click the subscribe button below, as well as the little bell icon right next to it. We'll see you next time.